Hey, what's up, my friend? So here's the thing, right? If trading is 80% psychology, then monks will be rich. If trading is about discipline, then soldiers, they will rule Wall Street. And if risk management alone work, then nobody will blow up their trading account. So clearly something is missing. And this is what today's video is about, right? I'll share with you why 95% of traders lose and how to be in the top 1% of traders. First, let's provide some context. Over the last 5 years, the S&P 500 has returned about 90%. So what this means is that if you made less than 90% over the last 5 years, if your portfolio, your account made less than 90% over the last 5 years, it means you didn't beat the markets. But if you made more than 90% over the last 5 years, you're probably in the top 5% of traders. And if you made substantially more than 90%, maybe 120, 150%, you're likely in the top 1% of traders. The reason I'm sharing this is because anyone can talk about, beating the markets, being in the top 5% of traders, top 1% of traders, but talk is cheap. What about results? So this is why, to prove to you that whatever I'm sharing with you works in the real world of trading, this is my own live trading results taken from my brokerage account. So you can see over here, over the last about 7 years, the green line is my trading account equity curve. My account is up about 343% versus 118% for the S&P 500. You can see this over here. Now, I'm showing this to you not to brag, but rather to let you know that the things that you're about to learn in today's video are the same strategies and concepts that I apply to my own live account. So here is what you'll learn today. Number one, we'll talk about why most traders struggle even if they are smart, hardworking, or motivated. Like no matter what they do, somehow they're just not getting ahead. Why is that? Next, I'll share with you how to actually put the odds in your favor to be in the top 5%, the top 1% of traders even, so you can profit in bull and bear markets, even during a recession. Then I'll share with you what it takes to become a profitable trader no matter what stage you're at, whether you've been losing for years or break even for the longest time. I'll give you the exact blueprint so you know what it takes to become a profitable trader. And finally, you'll discover that profitable trading is not as complicated as it seems. But at the same time, it's also not what you think. Sounds good? Then hit the subscribe button and let's get to it. To kick things off, right, here's why 95% of traders lose. And of course, there are many reasons for it, but based on my interaction and educating of traders over the years, these are the top few reasons why most traders lose. Number one, you don't have a proven strategy. And I can't really blame you for it because nowadays with social media, things like Facebook, YouTube, LinkedIn, X, there's so much information out there. You get information overload. One trading guru says, breakout is the way. Another one says, no, you gotta wait for a pullback. Let the market come to you. And another guy says, no, you gotta look at the stars, Rainer. Look at the moon for buy and sell signals. Astrology, baby. Now at this point, you feel overwhelmed. Every mother, son, daughter out there is telling you that their strategy works. How do you know what works? How do you know what doesn't work? And if you don't know what works, then how do you develop the conviction to follow the rules of your trading system? This then brings you to the next problem, strategy hopping. So this is where you hop from one strategy to the next with the hopes of finding something better, finding the holy grail. And it happened to me as well, right? Early on in my trading career, the first strategy that I was taught or I came about was using Bollinger Bands. Wait for the price to come towards the lower Bollinger Band, buy near the lows of the Bollinger Band, and then sell when it makes a bounce higher. Buy low, sell high. And when I trade this strategy at the start, I had like 3 or 4 winning trades in a row. And I thought to myself, man, I'm going to retire by 30, baby. I'm going to buy a villa and have a nice swimming pool in my villa by 30. And now I'm almost 40 years old. There's no villa, there's no swimming pool, but having 3 monkeys running around in my house. So anyway, eventually, right, while trading this strategy, I encountered a few losses, a series of losses. And that's when I think, maybe this strategy isn't working anymore. Let me move on to something better. Then I tried trading indicators, RSI, MACD, Fibonacci. And again, winning trades at the start, followed by a series of losers. And then that's where I have my conviction shattered and I look for the next best thing. So I tried sharp patterns, harmonic patterns, and this whole cycle will rinse, repeat itself. And the only pattern that I was good at recognizing is that my trading account balance is going down in a downtrend. You don't need any indicators for that, and it's a 100% winning rate. Yeah. So it's like going to the gym, right? For 1 week. 1 week you do strength training, then you see no results, you go and do high rocks, no results, you do CrossFit, then you switch to yoga, and you're all over the place. Your actions are inconsistent. And when your actions are inconsistent, that's where you get inconsistent results. And this is why, right, when you have no proven strategy, you don't have conviction, and this will naturally lead you to strategy hopping. And this brings me to the third reason why traders lose: lack of discipline. And what's interesting is that many traders, they think that they have a discipline problem. They think that they have a trading psychology problem. But I'm here to tell you that 80%, 90% of you watching this video now, if you feel that you have a discipline problem, I want to say that you don't have a discipline problem. Why do I say that? That's because most of your discipline problems stems from not having a proven strategy. Let me explain. Imagine this. Imagine you have this very special coin, and I give you this special coin. And every time the coin comes up heads, let's say it comes up heads, you win $2. And if it comes up tails, you lose $1. Now let me ask you, will you have a discipline problem? Will you have the fear of tossing the coin? Let's say you toss the coin and you have lost 3-4 times in a row. Will you struggle with that discipline to toss that coin because you lost 3 times in a row? Will you abandon the coin after 5 losses in a row? Of course not, right? You will flip this damn coin as often as you can. Morning, night, dinner, in the toilet, when you're peeing, you're flipping your bird, you're also flipping the coin. Why? Because the coin is a money maker. Does it make sense? So this is why, whatever discipline problem that you're facing right now, it's likely because you don't have a proven strategy that works. You don't have something that you believe in that will yield you a positive outcome, a profit in the long run. And that's why you struggle with your discipline. Next, emotions. Many traders lose because of emotions. Let me give you an example. Imagine this, you buy a stock, and within 3 days, the stock price went up 50%, and you're all over the moon, right? So at this point, do you sell or do you hold? For many of you, you would hold, right? Because you would think to yourself, man, Rainer, this is just the start of a new uptrend. I'm going to hold this stock, man. Let me get it to 100% and sell. It looks a lot better. So you decided to hold that stock. And shortly afterwards, the next day, the stock price makes a pullback. Now, from a 50% gain, you're now only at a 40% gain because you made a pullback. And you think to yourself, I gotta hold this trade because this is how winners are made, right? Tough time don't last, tough men do. So you hold the stock. And what happens next is that the pullback became a reversal. The stock price goes back all the way to your entry price. So if you just witnessed a 50% profit, comes back down to your entry price and you don't have a profit anymore. And you start to feel lousy about yourself. And you tell yourself, okay, I'm not going to be greedy anymore. If the stock makes a bounce, a 5-10% bounce, I'm taking profits. At least I got, again, a profit, better than nothing. But guess what? The stock somehow doesn't want to listen to you. It continues to go down lower, and now you're in the red. At this point, you're feeling uncomfortable. You watch a winning trade, becomes a break-even trade, and now it's a losing trade. You have no choice. You don't want to take the pain any longer, and you cut your loss. Yeah? And then, shortly afterwards, another trading opportunity comes along. You buy another stock. And within 1 day, the stock went up 5%. And you quickly sell. You sell it even faster, right? Than me running away when my wife says, honey, we need to talk. You sell the stock. And if you think about this, right, why does this happen? Well, it happens because of fear and greed. The first trade, you were greedy, you wanted more, and you watch the stock price reverse back to your entry price and, put you in the red. The second trade, there was fear, the fear of losing, right? You've just experienced what it's like, losing your open profits. So you quickly sell that stock because of fear. And for the second trade, you know usually what happens. The moment you sell, the stock price doubles the next week. Agree? And this happens because of a simple reason. It happens because you don't have rules. You don't have objective rules to tell you when to buy and sell. And if you don't trade with rules, you're going to be relying on your emotions to tell you when to get in and get out. And by now you should know that if you rely on emotions to buy and sell, it's usually at the worst possible time. And this is why many traders, right, they lose when they rely on their emotions. And because of emotions, it will also cause you to revenge trade, over trading, doubling down on your losses, right? After a series of losses, after losing consistently, the market can seems like it's out to get you. Things get personal. You have thoughts like, why is the market always out to get me? Why does it always hunt my stop loss? Why does it always reverse the moment I hit buy? Then you get angry. Some of them might even say things like, let me show you who's boss, right? How dare you do this to me? So this is where traders, they average down into their losses, they revenge trade, they widen their stop loss, and that's how traders blow up. Yeah, so all these trading mistakes that I've shared with you over here, these are what I call symptoms. Okay, they are not the cause. So what do I mean by this? Let me explain. So these are symptoms and not the cause. So a simple analogy is that let's say you forget your wife's birthday or her wedding anniversary or your wedding anniversary, whatever, right? Let's say you forget about it and your wife started to behave in a funny manner. She said things to you like, honey, we need to talk. And you ask her, are you alright? I'm fine. Don't touch me. Go away. Those are symptoms. Yeah, symptoms. There's something underlying that caused her to behave in this manner. And that underlying cause is because you forget your wedding anniversary, you forgot a birthday and whatnot. So same thing for trading, right? All this over here, they are symptoms. They are not the cause. There is something missing that traders lack that cause them to behave in this manner. So now, what are the cause behind it? To answer this question, I ask myself, what do the top 5% of traders have in common? What do profitable traders have in common? That's because profitable traders who can profit consistently, they can manage their emotions. They can remain disciplined, and that's how they extract profits from the market in the long run. So what I found out is this. I found out that all profitable traders, they have three things in common. And it doesn't matter whether you're an options trader, crypto trader, systems trader, price action trader, day trader. You must have these three things. If not, you will never make it. So let me explain to you what these three things are. Number one, you must have an edge in the markets. So an edge is something that you do repeatedly over time that yields a positive outcome. So let me give you an example. Imagine this. Imagine you toss a coin, and every time if the coin comes up head, you win $2. And every time it comes up tails, you lose $1. Let me ask you, in the long run, will you make money or lose money? You're probably thinking, well, Rainer, that's a no-brainer. You will make money, yeah? Exactly, you will make money in the long run because your winners is larger than your losses. At the same time, have a look at this example. Now, this time we inverse it. Every time it comes up head, you win $1. And if it comes up tails, you lose $2. In the long run, will you win or lose? Well, in the long run, you will lose because you don't have an edge in this coin toss. Now, here's the thing, right? In trading, your winning rate is not always 50%. So if it's 50%, it's easy to tell when you have an edge and when you don't have an edge. But what if in trading, you have a winning rate of 40%, 60%? How do you know whether you have an edge or not? So this is where I'm going to share with you how to actually define an edge. So it can be broken down into a very simple formula, which is this. E, which stands for expectancy, which stands for an edge, is winning percentage multiplied by your average gain minus your losing percentage multiplied by your average loss. So let me explain. So your winning percentage is very simple. If out of 10 trades, you win 6 trades, that is a 60% winning rate. Your average gain similar concept. If you made $1,000 after 10 trades, then your average gain per trade is $100. Just 1,000 divided by 10, you get 100. So that's how you calculate these figures over here. And once you have those figures, you can then plug it in to find out whether your strategy, whether your system gives you an edge in the markets. Here's an example. So if you look at this, let's say you have a trading system that has a 70% winning rate, and your average gain each time you win on average is about $80. You have a 30% losing rate, just 100% minus 70% will give you your losing rate, which is 30%. And let's say your average loss is $100. So in this case, you can see that your average loss is bigger than your average gain. So for traders who are familiar with the term risk to reward, you can see that your risk to reward ratio is not even a 1-to-1, right? You're risking, let's say, $1 and coming back to make 80 cents on average. Less than a 1-to-1 risk to reward ratio. So is this a profitable trading system in the long run? So again, plug in the numbers. So over here, 0.7, which is your winning rate, multiply by 80, which is your average gain, minus 0.3, which is your losing rate, multiply by 100, which is your average loss, and you get $26. So what does this $26 mean? So if your E, over here, your expectancy, your edge is positive, it means that the strategy, the system that you're using, it has an edge in the markets. And of course, if it's negative, then it means you have a negative edge. So what this means is that you can expect to earn an average of $26 per trade. So after 100 trades, you can expect to earn about $2,600, right? $26 multiplied by 100. Now, let me show you an example of a negative edge. Again, you can see over here, same winning rate, 70%, same losing rate, 30%. The only difference now is your average gain is $10 and your average loss is $100. And again, plug it into the formula and you get minus 23. So if you do this for your trading strategy or system and you realize that your edge, your expectancy is a negative figure, then please, right, pause your trading, pause your investing or whatever you're doing, right? Because you need to dig deeper to find out whether is this a strategy you want to be trading long term, because this means you can expect to lose an average of $23 per trade. And for most traders, this is not something that you want to do unless you are doing this from a high level perspective, like, you know, you're diversifying your strategies, you know, to profit in panic markets, you know, then that's fine. But again, I think most of you watching this video are not at that level yet. So if you have a negative expectancy, a negative edge, right, this is how you can go about telling whether you have an edge or not. Now, at this point, you might be thinking, but Rainer, you know, finding an edge in the markets is not easy. Who's going to give me strategies and systems that has a positive expectancy, an edge in the markets? I get it, right? It's not easy. I agree. There's a lot of work and research that has to be done for it, right? So this is why I'm going to give you this training, this free 54-minute training where you'll discover 3 rule-based trading strategies, trading systems that gives you an edge in the markets. And it's all backed by data. I've done all the backtesting work, so I'm giving you the exact trading rules, when to buy and when to sell. And we're covering multiple trading strategies. So we're covering a mean reversion, a trend following, and even a momentum strategies, along with all their backtested data, as you can see over here, for free. Okay, so if you're interested, then just go down to my website, tradingwithrainer.com/go, or I'll put the link somewhere below this video so you can get access to this training for free. Now, moving on, I want to talk about the next thing, which is very important, because you can have an edge in the markets, but without this one thing, you will still lose consistently in the long run. And I'm talking about your risk management. You must have risk management, because this is what protects your downside, no matter what happens, whether you have 5 or 10 losing trades in a row. Because without it, even a profitable trading system will fail. In fact, let me prove it to you why this is the case. So imagine this. Imagine there are 2 traders, John and Sally. And let's say they both have the same trading account, same size, $10,000. And let's say they both trade the same system, a 70% winning rate system with an average of a 1-to-1 risk-reward ratio. This means if you risk $100 on a trade and you make back $100, that's a 1-to-1 risk-reward ratio. Let's say John risked $5,000 per trade and Sally risked $100 per trade. And the outcome of the next 10 trades are as follows. You can see over here, lose, 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 followed by win, 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 win. So 3 losses first, followed by 7 winners. Now let me ask you, how much will John make after trading? Well, after 2 trades, John would have blown up because John risked $5,000 per trade. So first trade minus 5K, second trade minus 5K, and in essence, he has blown up his account, right? Faster than I lose an argument with my wife. Really fast. What about Sally? So you can see over here, Sally, again, trading the same system. The only difference is she risked $100 per trade. So her first 3 trades, Sally would have lost $300. Then because she didn't blow up her account, she still had funds to continue trading, she can experience these next 7 wins of $700. And in total, Sally would have made a profit of $400 after 10 trades. So you can see over here, Sally would have made a 4% return on her account. And the reason why I'm sharing with you this is because this shows you the importance of risk management. It doesn't matter what system you're trading, what's the size of your account. You can have the same winning rate, the same risk to reward ratio, but if you don't manage your risk, you will blow up your account. And remember, your job as a trader isn't to make money on every trade. Your job as a trader is to survive long enough for your age to play out. Okay? Risk more, survive, and let your age play out. And now, the last thing that you need is this. Discipline. Discipline refers to following the rules of your trading system, no matter what happens. Whether you're on a holiday, whether you're sick, whether you don't feel like it, whether you've encountered 10 losses in a row, you still must have the discipline to follow your rules, assuming your rules gives you a positive expectancy and age in the long run. Because if you don't, then what you're going to get is inconsistent results. And often you also experience that without proper discipline, even a losing trading, or rather, even a profitable trading system, right, can still lose you money in the long run. So here's why. So imagine this is the outcome of your next 7 trades. Your first trades, they're all losers. So for most traders, their thought process is something along the lines of, man, I've suffered 3 losses in a row now. And then the 4th trading opportunity comes along and you're thinking, the previous 3 trades are losers. This 4th trade is likely to be a loser as well. I think a better thing to do is to actually skip the trade. So that's what you do, right? You skip the 4th trading opportunity, and guess what? It turns out to be a winner. Now at this point in time, right, shortly afterwards, the 5th trading opportunity comes along. And again, the pain of the recent losses that you've just experienced is still very raw. You still feel it, it hurts. So when the 5th trading opportunity comes along, you skip it again, and it turns out to be a winner again. Next, the 6th trading opportunity comes along, and now you're kind of like in a dilemma, right? If you had you followed the rules of your system earlier, you would have experienced 2 winning trades. And now you look at it, oh man, the 4th trade is a winner, the 5th trade is a winner. So right now the losses is just around the corner. If I were to take this trade, it's likely to be a loser as well. Agree? So what do? Well, you skip the trade, and it turns out to be a winner again. So at this point, you feel really horrible about yourself. You have a proven trading system that works, but you keep doubting the rules and breaking the rules. So now the 7th trading opportunity comes along, and you tell yourself, no matter what, you will follow the rules of your system. You will enter it because it's a valid buy signal. And that's what you do. And the trade turns out to be a winner. But if you look at it, big picture wise, you've experienced 3 losses and 1 winning trade. After 7 trades, you're still a losing. You've still made losses, net losses. But had you followed the exact rules of your trading system to take all 7 trades, you would have come out ahead, positive, right? Because you have 4 winning trades versus 3 losing trades. But because of discipline, because of the inability to follow your rules, you actually lost money. So this is why you must have discipline, not just risk management, not just having an edge, but also discipline, right? Because consistent actions leads to consistent results. And if you want to be a consistently profitable trader, then you must be consistent with your actions. And that means being a disciplined trader. Do you agree? Smash the thumbs up button and hit subscribe, right, if you agree. Now, here are a few scenarios that you might be experiencing in your trading journey. Let me just list out all 3, and I'll start with this one over here. I think most traders are stuck with this one. You have the discipline. You know what is risk management, but you don't have an edge. So what you're experiencing right now is what I call death by 1,000 cuts. This means that in the long run, your account value is heading down lower over time. Not all at once, slowly but surely. And that's because when you don't have an edge in the markets, but you have risk management and discipline, you start to take that 1% loss consistently over time, and that depletes the value of your account. Next one, you can have an edge plus discipline, but no risk management. So in this case, you find yourself blowing up your account from time to time, like earlier the John example where he blew up his account after 2 trades. And this other scenario is where you have an edge and risk management, but no discipline. So if you are in this category, then you find yourself getting inconsistent results. Sometimes you make money, sometimes you lose money. And in the long run, you're not really profitable nor losing. You're kind of like break even in the middle of nowhere. So these are the 3 common scenarios that traders will experience, right, when they don't have either one of the factors. And this is why I said earlier that you must have all 3 to be a consistently profitable trader. You must have an edge, you must have risk management, and you must have discipline. This is what I call the trading success formula. You must have all 3, not 1, not 2, but all 3. And when you have the trading success formula, right, you can expect results like this. So this is the result of a trend following system since 2000. So this system has generated about 3,517% since 2000. For example, in 2014, it's up 70%, 2015 up 3%, 2018 lost 2%, 2023 lost 19%, etc. So this trading system's profit, right, where markets are trending. And as you can see, right, this alone will put you in the top 5% of traders because you are consistently profitable in the long run. We're looking like over years and not just over a few days or a few months. And at the same time, right, this will not put you in the top 1% of traders. Why is that? Because you will experience drawdowns. So for example, when you just rely on this one system, this one strategy, when market conditions change, you will go into a drawdown, which explains why you will experience losing months and even losing years. Because for a trend following system, when markets become choppy, right, you will experience losses along the way. So now the question is, how do you then be in the top 1% of traders? How do you be a trader who can profit in different market conditions, whether it's a bull market, a bear market, or even during a recession? And the secret is this: if you want to be in the top 1% of traders, you must have multiple trading systems, not just one. Must have one or more. The more the merrier. Because when you combine multiple trading systems, you can profit in different market conditions. So let me give you an example. It's like, let's say for example, you run a restaurant business. You have one restaurant. And if that year economic conditions are bad, or for whatever reasons your restaurant is not doing well, guess what? All your income will be tied to that restaurant and you will likely lose money in that year. But what if you have 5 restaurants, 5 different restaurants selling 5 different cuisines at 5 different locations? Now, even if one restaurant is doing poorly, you still have another 4 restaurants that could help you cushion the losses and still give you a profitable year, right? Because you have multiple restaurants under your belt. And it's the same thing for trading, right? When you have multiple trading systems, you increase your odds of making a profit in a given year. So here's an example. So for example, this is the trend following system I shared with you earlier. Now, let's say you pair it up with another system, let's call it MRT, not the Singapore choo-choo train, but the mean reversion trading system. And you realize that your results now is a lot more smoother because you can look at this third column and see that you're making a profit almost every single year, and the only losing year you had was 2023, which is a loss of 5%. Other than that, right, whether it's the dot-com bubble in 2000, whether it's the 2008 financial crisis, whether it's the 2020 COVID, 2022 Russia-Ukraine war, you have been making a profit even in this difficult market condition. So now can you see the importance of having multiple trading systems? And this is how you be in the top 1% of traders, someone who can profit in bull and bear markets, even during a recession. So let's do a quick recap to what we've covered today. Number 1, why traders fail. So many traders fail because they don't have a proven strategy. They're strategy hopping, they can't manage their emotions, and they do things like revenge trading, over trading. And as mentioned earlier, these are not the cause, these are the symptoms. And these symptoms exist because you don't have the trading success formula, which is you don't have an edge, risk management plus discipline. Because if you have it, then remember my coin toss example. You have this magic coin that makes you money every time it's hit. You win $2, tails you lose $1. Guess what? You'll be tossing that coin every single day, right? Whether it's breakfast, lunch, or dinner, you'll be tossing as much as possible. You won't have any discipline issues. And this is how your trading will be like when you have the trading success formula. And that alone will put you in the top 5% of traders. And if you want to take things further, to be in the top 1% of traders, someone who can profit almost every single year, then you need multiple trading systems, because you have different trading systems that allows you to profit in different market conditions. Maybe a system that do well in a choppy range market, a system that do well in the bull market, a system that do well in the bear market. When you have all three, this is where you own multiple restaurants under your belt and you really will put the odds in your favor. And again, if you are interested to learn more about this different type of trading systems so you can profit in different market conditions, you can go down to my website at tradingwithrainer.com/go and grab this free 54-minute training where I'll teach you the rules of these different trading systems. You cover mean reversion trading, trend following, momentum, and I'll even give you the complete trading rules along with the backtest report, the cheat sheet, so you know how to implement these trading systems on your own. So the link over here is at tradingwithrainer.com/go. You can either go down to this link over here or scan the QR code to get started right now, or I'll put the link somewhere below this video so you can access it. Right, so with that said, I wish you good luck and good trading. I will talk to you soon.